Here it is, the short-term view for the U.S. stock market. We're going to look at the S&P 500. Like I said earlier, we only get partial credit for this. We thought it would be choppy and makes some higher ground after a decline. We thought it would test 3,300 on the S&P 500. It did not do that. It went straight up into the resistance zone that we thought would happen after a dip, or could happen. Now it's actually stronger. We did not expect that it would move up. We expected to see a wide range in the market between now and the next few weeks. We thought it would be, the range would be 34.65 on the upside, 32.47 on the downside. Well, what happened was that it moved up to the top of the range and then began to, continue to move. So here we are now at 34.74. So now we're about 7 points, not that much above the levels that we thought we would get at. We upgraded the structure in here again. Now this is the second time as we got through resistances. That's really what happens. It's a mechanical thing that we do that really gives us a sense. Once it gets through into the upper channel, as you can see here, it's a far more positive occurrence. And then the momentum turns negative over here. Positive, and it really, does enhance our understanding of what's going on. So we have raised what we think is going to be the bigger range, but not quite the range that we talked about in the beginning of the show. So the upward target now, or the resistance at the top of this here, is at about 35.07. That's a little higher by about 40 points from where we had it last week. And what we think is that it could still make a little bit more ground, but then we get into this right over here where the minor cycle, which bottomed really in a strong way right over here, and the dominant cycle begin to point to the downside. So what we're looking for in the next couple of weeks is maybe a little more upside attempt in here. It really depends. I think that if a stimulus program is passed, and it's anticipated that it will be very quickly now, then you'll pop into this area quickly and then begin to give it up. So we're going to look for a decline. Now, if it makes higher ground, these numbers are going to go up by a little bit. But we think that there is a lot of risk coming into the market starting in just a couple of days. So we're going to look for a downturn sometime in the next couple of days after maybe testing that level up there and then coming down. Now, because we're in the top of the channel, we think we'll probably stay in the top of the channel during this period right over here. That would give us a test on the downside coming in the area of the 33.80 that I have right there, and maybe 33.45 to 33.15, depending on how much selling becomes in here. 33.15 is 160 points to the downside. That would be pretty significant, and still we do believe it could happen. But right now we're going to look for 33.80 is the most likely occurrence in the next week and a half. So this comes out to October 22nd. So between the 20th and 24th, really based on the principle of variance, is where we see this decline coming to. We have those dates also aligned in the NASDAQ and in the Russell. Now, the Russell is much stronger than this. The NASDAQ is much weaker than this, as the NASDAQ stocks really have some significant breakdowns in there. And that's why I believe that this upside is limited, because I think you're going to start to see some big hits on the downside in some of those tech stocks that have led the market and now are lagging this upside move. The NASDAQ is not anywhere as strong as what we're looking at here, and the Russell much stronger, as the Russell has already taken out the high that came right in the market in this time frame. So Russell much stronger, the NASDAQ much weaker, and the S&P 500 kind of in the middle of that. The range that we're looking for in our sum of the evidence is that we're going to see over between the period between now and the election a little bit wider range. So an area of 35.07 is what we're looking for on the upside, and then the bottom that comes in around this 33.15 area right over there is kind of the range that we think we're going to get into. Is we get a break in here, and then we get into another rally phase over here, which takes you out towards the election time, and then the risks, of course, really pick up. If by some chance it gets really weak and gets below this level right over here, 32.10 or so, that changes everything in a very, very significantly negative way. If it gets above this level over here, 35.07, then the 35.88 level would be the next level. We make the probability of that less than, I would say less than 20%, the probability of getting below this 33.15, more like about 60%, and then probably stuck somewhere in the middle. So you see we're giving it about a 3-to-1 risk reward to a downside break versus an upside breakout. And that's about everything that I could give you in here. Targets in here for the next week and a half, getting down below that 33.80 number next week or into the following week, October 20th to 24th, the target timing for a decline and that next bottom.